If you've seen a few of my videos so far, you'll know that I'm extremely passionate and optimistic about Brisbane's future. There is a thriving business scene in Brisbane. I own and run 3 businesses here, and I wanted to bring you a series of interviews of hand-selected people who share this vision. My guest on the channel today is Todd Pepper. Todd is the Executive Director of Alceon in Queensland. Under Todd's leadership, Alceon are investing over $85 million on the world's most advanced recycling facility, and it's coming to Brisbane. Todd will explain how he is manoeuvring the complex circular recycling economy, as well as his firm's recent investment into some $200 million of commercial office development and investment, and how he built a $500 million market cap manufactured home park village. Todd is a titan of the Brisbane property industry, and maybe soon, we'll call him the man who blazed the trail in Australia's recycling industry. I've spent quite a bit of time with Todd recently, so I've had the opportunity to hear his story of humble beginnings to the successful business he leads today. I hope you're interested in hearing what Todd has to say, and if you're watching this on your mobile phone or on your computer, I suggest watching it on your TV, because it is a bit of a longer format we are trialling out, because today we're talking tactics. Todd Pepper, welcome to Talking Tactics.
Thank you, Mel.
Todd, I understand that you're from rural Ipswich and that you wanted to be a vet when you grew up, and somehow you ended up running a private equity firm.
I did.
How did you end up here?
I did want to be a vet. I didn't quite apply myself at high school well enough to get the type of TE score I needed to get, but the girl I was dating at the time wanted to be a property valuer, so I coincidentally ended up not getting into vet and having property valuation as my second choice to hang out with her. She didn't get in. I ended up being a property valuer. And then a long journey of through development, through valuation, through being a salesman, and then a period of time in investment banking, ended up where we've had the opportunity to have a bit of skills and start our own thing a few years ago.
So you mentioned investment banking. I believe that was at Babcock and Brown.
Yeah, started with ABN AMRO, which came on the back of a unique financing structure we did for a high-rise residential tower. And then as the world moved away from debt towards equity, that whole team went to Babcock and Brown in 2005 and spent some time within Babcock's learning essentially how to syndicate, and then use that as a launch pad in 2008 to start my own platform. 2008, just when the GFC was hitting, and what, you were going around tapping people on the shoulder asking them for some money? Well, yeah, we actually made the decision in August 2007, so GFC hadn't quite kicked in, but bonuses weren't paid till March 2008, so I had to wait till then. But then it was actually unique timing, because on the back of really the commencement of the GFC, the start of the downfall in the share market, that's when opportunities start to avail themselves, and we started in March 2008 and ultimately able to buy our first asset within a couple of months in July 2008, and that was the sort of launching pad to be able to do what we've done for the last 14. The Fitness First building at Lutwyche.
Yep, okay.
So we bought it. We had a good financial backer in Scott Hutchinson. We had planned to develop it out as an apartment tower, but a few infrastructure projects got in the road of that approval process. Anyway, yields compressed, that property then sold for a gain, and then probably 8 years later, we bought the property back because we were able to leverage Ladbrokes into another building and bought that asset and then resold it again only recently.
So lots of buying, selling, trading,
yeah.
And going back to the original roots, you might buy it a third time? Or?
Yeah, no. Ultimately, I would have liked to have kept it because I think it was a good asset, but yeah, no, we won't be back there again.
And how did the whole partnership with Alceon commence? Because you mentioned you started your own business, Harvest, and then it sort of rolled into Alceon. How did that all come about?
Yeah, so Harvest was established because I had a little bit of money. I had a partner who had some good skills that we were able to leverage off each other, and we were able to put together probably 4 property syndicates off separate market sectors that we were pursuing at the time. One of those was an asset class called manufactured home estates, where we quickly realised that the scale of the opportunity in that space was a lot greater than we were able to access capital. So we wrote a business case on how and where we thought that sector we could take that sector, identified sort of how much money and how big it could be, and went on a roadshow to find a partner. Having worked with all the Alceon people back at Babcock Brown, it was an easy conversation. And instead of sort of giving us the 5 mil we were trying to raise, they gave us 20 mil, and that led to the start of a platform in a business we called Gateway Lifestyle. That went from buying a first manufactured home park to a $500 million listing over 6 years. So that started that. We also had a strategy in suburban office park development. We had a thesis on how big we thought that sector could go and how much money we needed to do that. We'd bought 2 assets. Alceon then backed us into that. And every time we were putting up a deal with them, it made sense that but they would say yes, and ultimately it would make sense that we could sell half the business, rebrand ourselves as Alceon Queensland, and ultimately that's exactly the way the Alceon Queensland runs today. It's a joint venture between Alceon Group and myself, and we just continue to pursue what we think are asset classes where there's value left in them.
So you've mentioned that you've predominantly focused on suburban office markets and manufactured home parks, and really staying away from the ivory towers in the CBD. Is there any reason why you've chosen to focus on the sectors of the market that you're currently focusing on?
Yeah, it's probably trying to find the path of least resistance and competition. Plenty of money in the market for ivory towers in the city, plenty of competition against those assets, but the number of people developing A-grade office buildings in suburban locations around transport nodes with high car park ratios, there's only a handful of people in Brisbane ultimately doing that, and that through introducing a bit more capital we were able to participate in that space. We've been doing that now for 14 years and done nearly 100,000 square metres of walk-up office space in and around the suburbs.
So really it's about identifying long-term trends that you see underlying value in and really pouncing on those opportunities, because they're not the ones that everyone is running the ruler over.
Yep.
And just trying to really pick stuff that other people probably either aren't looking at or aren't looking at too deeply.
Yep, no, that's basically private equity real estate. So identifying the opportunity, securing assets in that class, essentially corporatising the operation of them, and then ultimately securitising those assets. So we've done it, certainly provide a bunch of pref equity behind a number of high-rise residential developers. On the back of high-rise apartment markets running, the housing market always runs after that. So we quickly identified a partner in the medium density or low density residential space with Ausbuild, and we've been working with them now for 9 years and done over 2,500 housing lots with them over that period of time.
Well, that's a huge number.
Yeah, so we've identify those opportunities and then provide them with the capital to enable them to deliver what their human resource team's capable of delivering.
Yep. And one of the projects that Alceon are delivering is at Northshore, Hamilton.
Yep.
It's recently been identified as the athletes' village for the upcoming 2032 Brisbane Olympic Games.
Yep.
What kind of opportunities is that going to throw up for business and the precinct, and why is this something that Alceon are putting their money behind? We
first got control of that site through an open market process in joint venture with Economic Development Queensland, or EDQ. Because
state government?
Yeah, state government. It was a master plan community, and within every master plan community, they always try and plan out where the work, live, play component. We were essentially the work component of it. So it started off very slowly. We were lucky to secure Puma Fuels as a key anchor tenant to one of the buildings, but also our joint venture partner created an incubation space out there as well. And it's been quite surprising, the take up of how many tenants have gone to new buildings in that space. So I think we've done over 24,000 square metres just in that strip of buildings that are there, and we'll continue to develop more buildings over the surplus land we've got there.
A lot of the occupiers that are looking at upgrading the level of quality of their accommodation as well, whether they want to attract better quality staff, retain their good staff, or just generally be able to get people in the office. It really has appealed to that demographic where people are coming out of their old industrial sheds, where they've got their dusty old office, say in Eagle Farm, and they want to come that little bit closer, have that extra parking, and it really has appealed to that segment of the market where people are looking for a higher level of quality, and that's really the gap that North Shore's filling.
It's been pretty consistent, that theme of upgrading quality of office standard as a key metric to attract staff. We go through it with our recycling business, trying to attract key senior level staff who are then going to work in a donga next to a dusty recycling site. You can't actually retain them. So, similarly, a lot of the office space attached to warehousing is not up to the type of standard that senior executives are ultimately going to want to occupy. So having new fit out, having new amenity, having access to car parking, it's certainly been
and it is providing that
attraction.
suburban alternative as well, so that you don't have to come into the CBD, which a lot of these businesses that are out in industrial suburbs don't necessarily want to come into an ivory tower in the city
exactly.
either.
So you can get into Hamilton Northshore, up and down the Gateway motorway or up any of the arterial thoroughfares and get straight out to them. You get to any suburb in pretty quick time. You can get to the CBD in about 10 minutes. So it's accessible from all angles. And Northshore obviously doesn't have a train going into it, but there are bus services, but it's really predominantly driven by ease of access by cars.
And you've also recently purchased an iconic property out in Albion on top of the hill there, big 10,000 square metre office building that you're going to refurbish.
Yeah.
Tell us a little bit about that. It's a big chunk of risk that you've bitten off.
It certainly is, but it's one of those, you fall in love with an asset. We've been working on that thing for about 5 years now with different ideas. But when you get that type of size of land, flexibility of existing structure, flexibility of zoning and land use, on high voltage power lines next to a train station with easy access to all arterial road networks, something positive is going to happen there. Assets like that should be part of the infrastructure planning for growth for an area like Brisbane. Those type of properties only come up every now and again where they can plan for growth. So that asset would be a great asset for something like TAFE, because you can take the existing building and when that's full, build another one, and you can build that one, build another one, and you can ultimately preserve 50 years of vocational training on one site. Doesn't matter whether it's education, it could be a school, it could be a primary school, it could be a high school, it could be a health facility given its proximity to the RBH. There's a whole bunch of flexibility about it, and that's one of the key things we look for in the assets that we're buying, is having that flexibility of appeal.
Well, it really is a catalyst site, and it could quite easily trigger the next round of urban renewal, particularly with the Cross River Rail upgrade that's also going into the train station. Like it is something that government should pay strong attention to.
Absolutely. Well, Albion is sort of the first existing train station at the end of the new Cross River Rail. So you can get on Albion Station, get on a train at Albion Station and go to the Gold Coast, you can go to the RBH, you can go to Central Station, you can go to the airport. It becomes a real central hub. And then with the recently announced Better Suburbs program by Brisbane City Council and the initiatives they're trying to bring into it, Albion really has an opportunity to grow into that space. And a lot of the developers are now starting to look to collaborate and how we actually achieve and deliver under that Better Suburbs program. Because Albion's got all the features of being another Nunda, but better.
What kind of transformation can we expect at the site over the next 12 to 18 months?
We're working a couple of angles, but the first thing, we see value in the existing structure. So we will be refurbishing the existing structure, because whether that's as an education facility, whether it's as a health facility or just another office building, it will need to be refurbished. The positioning of the asset makes it very easy to bring up to a 5-star energy efficient nature or neighbours rating, and that's what we'll be doing as the first piece. And then we've got plans of integrating development across the rest of the site, which could be for any purpose.
And Rino is a business that Alceon have recently purchased. It's a recycling company, which it seems like it's somewhat outside of the normal wheelhouse of private property equity. It's a pure private equity play.
Yeah.
What was the decision-making process behind wanting to buy a business that is a recycling business?
Yeah, it comes back to that concept of having a thematic-based investment approach. We originally went out to Eagle Farm and Pinkenba looking for industrial land. We came across an asset that was presented to us as a block of land on a sale and leaseback. The operation of the business on site was a construction and demolition waste recycling facility. It was run by a family organisation who had run it on the smell of an oily rag and ultimately managed it on the back of a bulldozer. We saw it as an industry in transition, that through the introduction of professional management CapEx, there was ultimately an opportunity to grow it. In the time since we've bought it, the Olympics have been announced, City deal's been announced, there's been more infrastructure in the federal budget, and now with the amount of money allocated under the state budget and the recent increasing of the landfill levy just before Christmas at the end of 2021, the size of the opportunity for that business is enormous. Unfortunately, the plant we need to be able to process the waste that exists in that market has become enormous as well. So,
what kind of a quantum of investment are we talking?
So we're spending about $85 million on both the machine and the enabling infrastructure to put that in place.
Can you tell us a little bit more about the machine itself? Like, that's a significant investment in a piece of machinery that effectively is for recycling.
I use the tagline, or the simple description of the asset is, it will be the largest by volume construction and demolition waste wet and dry processing facility in the world, and that comes from the manufacturers. What's unique about what we've done is we've combined both the wet and dry processing, and whilst we would say a target is a 97% recovery of waste through the machine, our actual overall target is to have 100% recovery of all the construction and demolition waste that comes through our yard. So the thematic was a large parcel of industrial land, but what came with that was an operation that has strong social and political support and is an industry in transition that we thought that we could actually add some value in.
So it is really quite an advanced piece of machinery. Is there anything else like it in Australia?
There's parts of it in operation, but not on the integrated nature and we've put together. But if you go through our process, so the way it operates at the moment, we get skip waste, we get demolition trucks, we get vac waste, we get concrete washout, all trucks coming through our yard each day, and they get dropped off at different points. Our machines, which are excavators, front-end loaders, moxies, different types of operational plant that we have on site, all mobile equipment, crushers and screeners, we might handle that piece of waste up to 7 times in that process. The new piece of gear will allow us to basically receive the waste, take some of the big lumps out of it and the stuff that you can't deal with, and essentially put it into that machine, and then someone described it as going on Luna Park for rubbish. You put it in, it'll ultimately go through the sorting, sifting, segregating, crushing, screening, washing process, and ultimately all the component parts of that waste get separated and segregated and piled into resources that are ultimately be able to be recovered for either other parts of recycling or going straight back into construction materials, which is...
So it really is the true circular economy.
It's absolutely the true circular economy. The recycling process should start from the moment you pull something down and then we can supply those recovered resources back into those projects. And that's still in its infancy in this state.
You're taking a product that was previously going towards landfill, and we were just basically digging a hole and covering it back up, and now instead it's going through a machine that goes and takes it all in and then spits out a usable...
materials recovery facility. At Northshore Hamilton, as part of a commitment to us, EDQ recently upgraded Cedar Road. 98% of the material under the hot mix of that road was supplied by Rino Recycling. That material came from the McLean stand at Ballymore, buildings from the Marta, the old Holden dealership on Newmarket Road, Petrie Barracks. Bits of Brisbane history were essentially crushed, sorted, separated and created a road base that had been used under that road. But that shows you that if government commits to the use of those resources, then that's them supporting that circular economy by using those recovered resources in other projects. It'll attract more investment for us to produce more of those products.
I was actually on Cedar Road this morning. I actually parked my car on the road that you're talking about. It's funny that you mention it. It looks like just like any other normal bitumen road. You wouldn't know that it's 98% recycled.
But the interesting part, and you can actually look at this, is you have a look at Daisy Hill National Park on Nearmap or on Google Maps, and you'll see this lovely big green zone that's been preserved between Redlands and Brisbane City Council and all National Park Zone. And then you zoom in a bit further and there's a big hole and you go, what's that? And you look back in, it's Caraman's massive quarry right in the guts of a national park. You can also see the same thing at Brisbane City Council's quarry near Mount Cootha National Park. If it wasn't for the resources, the products that we ultimately provided, that's where that material would have come from for those type of roads.
So we're better off reusing and recycling the stuff that we've already got.
Absolutely. The problem with waste is that it doesn't go from your bin into a waste to energy plant. It doesn't go into separate. We've got separate bins to try and separate.
These are usable resources that we're used to putting in landfill.
You think about skip bins. It's everything. It's tiles, concrete, timber, plastic, lots of ice break bottles. That all goes in together. It goes to a site. Now, some of the skip operators will do a primary separation of that. A lot of them don't. But that has to all be separated. And when it comes in the volumes that you see that we actually create on a daily basis, you actually have to invest in a piece of machinery that separates that material before you can do things with it. And that's where the big cost ultimately is. Until the upgrade of the landfill levy recently, there hasn't been any real catalyst to drive that investment. And so we don't have any landfills. We have no holes to go and bury the material in, so we have to recover it to increase the margin within our business.
Ipswich has been traditionally the dumping ground for South East Queensland, hasn't it? Where and they've now put up a big sign saying no more dumps in Ipswich, and I think that's in effect, and we're going to potentially run out of landfill space within South East Queensland by in the next 2 years, 2024?
In the next 2 years. So the government's own adopted model of available non-putrescible landfill space is due to be exhausted in the next few years. So something that in an economy that's growing like ours with the amount of construction activity to happen, something's got to happen. But Ipswich is unfortunately where a lot of the old holes and where all the mines used to be, so they're the natural big holes that need to be filled up and they're the easiest form. The problem is they come with a whole bunch of environmental and social and a lot of negative stigmatism associated with it. So there has to be a solution there. And I think if you look at, if governments are truly committed to diverting landfill, they will come out with a situation where they'll have to approve landfill because there is not enough technology here to get the type of rates of recovery we're ultimately aiming for. But there will be an obligation for them to do a certain amount of recycling of the materials before it puts in a hole. We've just been fortunate to probably be ahead of that curve and have a machine that can achieve those sorts of targets.
Do you think it'll hit crisis mode before the government kick into gear? Would that be the catalyst for change, or will it just naturally happen with the new plant that you guys are building?
Look, there is actually some stress already in that waste market at the moment with a number of the skip operators. With the recent closure of one of the landfills, it's creating a bit of pressure, and there is some stress as to where those smaller bin operators can actually dump their waste. There is actually a bit of a crisis out there in the waste space, and it is going to continue to escalate like everything else in the construction market. But there are a number of key operators looking at more investment and commitment towards recycling. That'll evolve over time.
Well, it certainly sounds like Alceon's doing the homework to make sure it doesn't hit that crisis level, but obviously there's a lot of opportunity in that space to fix some real structural problems and obviously help the economy transition into that more clean, green, renewable space.
Mel, over the last 6 months that I've spent a lot of time promoting the material that we can already sell material today, but the quality of what will be produced on the back of this investment will be significantly greater. So I've spent a lot of time working with corporates about starting to think about, before they build up and hit green star ratings, they actually start thinking about, before they demolish something, where that material is going. But every large company now has a sustainability target, including a lot of the large privates. And so they're now all starting to turn their focus to it. So again, there will be a market for these products. We just have to have the machinery to be able to create the quality of what they need to be able to use it in higher order infrastructure type developments.
So there's 3 layers of government. I'd like to go by each sector of government and try and understand your thoughts as to what each respective government should be doing to help grow the economy. Start with local government. What do you think the local Brisbane City Council should be doing?
I think Brisbane City Council's actually ahead of the curve. So their recent announcement of their Better Suburbs program, and obviously these questions are going to be towards the industries that we're involved in, but that separation and segregation of what we have always been as a CBD-centric city, and creating better suburbs with more amenity, more ability to live and work closer to home. There's initiatives already in place for that, and there was recent announcements about larger dormant, obsolete industrial suburbs being converted into higher density, more residential purposes, more retail purposes. That's a great outcome, because then we can start to create office space environments where people can work within those suburbs. It's already been happening, so I think Brisbane City Council's ahead of a curve on that front.
Yeah, well, certainly with the infrastructure projects like the Brisbane Metro, which we shot a video recently with Councillor Brian Murphy. It's a clean, green, electric bus that is really quite forward thinking, and I'd have to tip my hat off to them as well. They are certainly ahead of the curve. I think it's going to be one of the best public transport infrastructure projects potentially in the world. I think
outside of the Lime scooter craze. Mate, Melbourne's a flagship of ease of access to public transport through their tram system. If Metro can provide anything like that type of accessibility to public transport in connection with Cross River Rail and all of the other infrastructure already in place, and it makes Brisbane a much better place.
And what about the local state government? The state government. What should they be doing?
So what's state government's two biggest issues? I think obviously health is the biggest issue, and obviously the recent budgets put a lot of money towards that. Obviously education is another area. Education, state runs TAFE, or technical and further education, yet Albioni's gone and promoted 465,000 free TAFE places. So there's a lot of disconnection between, skill, what the well-publicised targets of Skilling Australia, and actually disseminating the money necessary to turn that into training on the ground. So, I think that's ultimately where Queensland government can focus on, is on that education piece.
So to help basically the federal government try and execute on some of the strategies and some of the promises that they've made by actually going out there and filling up a lot of these TAFE courses and whatnot, or at least finding people, which could also help with the real skills shortage that is out there in the trade space.
Absolutely. Like the last TAFE facility that was built in Queensland was here at South Bank, and it was done in 2005 through to 2008. So it's a significant 14, 15 years ago since the last upgrade in TAFE investment has occurred, other than the one that's just been completed at Robina. So more money, more facilities for non-university oriented education.
Well, people wonder why building prices have gone up so much, and
anyone can get a job at the moment.
You can't get subcontractors, can't you?
Yeah,
They're just not available. There's an extreme shortage of them.
Yeah.
So we need to get out there and start training a lot more of them.
Absolutely. There's a job for anyone that wants one out there at the moment.
I've got some market outlook questions that I'd like to ask as well, which how you see things evolving over the next 12 months within South East Queensland. What do you think about development site prices? What are they going to do over the next 12 months?
I think development sites are going to go through that period where vendors still think they're worth an amount of money. They haven't really come to terms with what construction price increases have done to the value of their land. If you take a normal feasibility and you increase construction price and the overall value of the asset hasn't gone up, then land value has to go back to attract or warrant the development. Historically though, we haven't seen a lot of reduction in land value, but we will go through a stage of dormancy where things just won't trade for a period until there's some financial pressure on a lot of those owners to start selling things.
Well, it really does stem from construction prices, doesn't it? What do you think they're going to do over the next 12 months? Are they going to go up, or are they going to go sideways? Are they going to go down?
It's interesting because obviously we get a lot of exposure through some of the development partners we've got, and there has already been some stabilisation in prices. One of our builders already got their first notice of a steel decrease, and we've seen that through the recycling business that steel prices are starting to come back. Home builder was great for creating and stimulating a lot of development in that space, but it also created a significant amount of demand for a system that wasn't quite ready for it and was essentially crunched because of COVID logistics impacts. I think prices will plateau. will come down in some areas. It'll be more about the availability of the product where we can, we don't have long lead times on a lot of those developments, certainly for the next 12 months. Prices might start to come off 18 months after that.
We've just gone through a record tightening in yields, and interest rates are obviously also increasing now.
Yeah.
So where do you see property investment yields over the next 12 months?
Yeah, well, it's sort of influenced by the amount of capital that's actually out there looking for different asset classes. So if you take the literal and technical component, if the 10-year bond rate's at hovering around 4%, that's traditionally been our risk-free rate. And then you go prime real estate is on average a 150 to 250 point sort of premium to that pricing. Then we're talking about yields that were 4 and 4.5%, pushing up to 5 to 6.5%, and then those same ramifications through the rest of the B, C and D grade asset classes. On paper, yields have to go up. The cost of debt, anyone who uses leverage, it's costing them there more money, so the arbitrage between cost of debt and purchase yield to give a higher return on equity is gone. I think there has to be, and it's already being witnessed in the market, prices are starting to come back. The frequency of transactions coming back. A lot of things that have been in DD for the last 3 to 6 months are already falling out of contract because people want to
It's
reprice.
just such a moving target, isn't it?
Oh, absolutely.
Interest rates are going up, yields are also going up, construction prices are going up, land we're not quite sure just yet. It's just so many levers all moving, and it's just hard to pick them up.
You want to have a good crystal ball to work out where prices were going in this market, but I think unilaterally people will agree that things have come off and will continue to come off. Having said that, any long-term government lease, social infrastructure style assets are still achieving premium yields. Any health-based assets, because of the sticky nature of those tenancies, occupants, operations, they're still achieving premium yields, which are dislocated to where prime, where the risk-free rate is. That'll occur for a period of time because there's just an amount of money chasing those types of assets. But that's bridging real estate fundamentals and infrastructure pricing, and hence the social infrastructure category being a relatively new phenomenon.
Yes. And there was a lot of questions over, say, COVID period where people were actually wondering as to whether or not the office is still required with work from home policies and whatnot. How do you see work from home policies evolving over the next 12 months?
Look, I think there's been a consistent re-engagement between staff and their office space, certainly over the last 6 months. If you're simply a process-oriented style of employee, you can do your job, you can work from home, and you can be quite efficient. But there's a whole bunch of other risk for an employer in that space in terms of workers' risk working in their own environment and workers' compensation. I think there's a bunch of mental health type elements that sit with that side. And then the other sector of the market where you need collaboration, you need that interface with other people for ideas generation to come up and identify opportunities in the market. You need to be in these, in office spaces where you can actually have that interaction with other people. Workplaces are a learning environment. You get to learn off the people that you work with around you. So if you just sit in your office at home and go out and watch Oprah on your breaks while you're eating lunch, you're not learning a lot. You're not actually evolving. You're not having that interface with either your superiors or your peers to learn more while you're doing it.
And where do you think office rental rates are going to go?
If you follow construction prices, then delivering this office building or any office building is costing more, and therefore your rents are going to have to go up. The problem with that is there's still a lot of available space in our market, so until a lot of that's absorbed, rents won't go anywhere, but we'll progressively have the ability to probably lift face rents, and then over time as available space diminishes, incentives will start to fall away. But Brisbane's always had this environment where we tend to build a new building just as incentives and available space starts to contract, we go build another building. And that's happening right now with 360 Queen Street, obviously the Dexus development, Consolidated Properties 895 Ann. There's a lot of space that's being developed, and historically tenants have flocked or move to that, or flight to quality for that type of accommodation, it's the B grade, C grade and D grade space that ultimately starts to get hurt in that environment. So I think long term we will see rental growth certainly in South East Queensland.
And what do you think is the biggest opportunity facing us over the next 12 months?
Personally, and obviously economically, that commitment to circular economy, like we've invested heavily in that space, both on time and financially. Driving investment into the diversion of landfill, having a state government that's committed to that diversion of landfill, the attraction of new technologies, whether it be waste to energy, whether it's other upstream recycling processes with hazardous soils, food organics, garden organics, PFAS treatment. It's actually now a sector of the market that has some real tailwinds and a lot of social support, and government can actually commit a little bit more to that by using those recovered resources. Like a lot of the waste that gets produced out of the C&D process creates a product called a solid recoverable fuel, which is food stock or a coal alternative to drive energy plants. So in the hierarchy of waste, landfill is the least favoured. Incineration or burning or gasification is the next least favourite, but it's certainly a lot better than landfill. And until we create products that are ultimately being able to be used for other things, there's ways to generate energy, divert landfill, and I think that's a sector of the market that's really going to evolve over time, particularly in South East Queensland.
And if people like what you and Alceon are doing and they want to get in contact to either invest or talk about some of these opportunities in further detail, what's the best way to go about that?
Just pick up the phone. We're always open for new investors, but I guess our target is now strategic investors who have strong commitment to the thesis that we've invested in to take it from the level we can take it to the next level.
It certainly does sound like an exciting time to be in South East Queensland, particularly in some of the key sectors that you've chosen. I'm personally quite excited. I've been going out there as well and expanding my business for the same reasons. So thanks for coming and talking tactics, Todd.
Thanks, Mel. Appreciate it.
If you'd like to receive leasing information on either Northshore Hamilton or the former TAB building in Albion, feel free to contact me. My details are in the description below. And don't forget to hit that subscribe button, because next up, we'll be speaking to the property whisperer himself. No, it's not Warren Buffett, it's the other Warren. None other than Warren Ebbett of Sentinel Property Group. Thanks for tuning in to Talking Tactics.